I get asked all the time. The nationwide housing boom keeps hitting new benchmarks. Prices continue to rise. It feels a little bit like 2008. Are we in a housing bubble? Many experts say no, but why? My friend Kyle Wesselink, mortgage advisor at American Dream Mortgage, gives us 3 reasons we are not in a housing bubble in 2021. And Kyle's joining us now. Kyle, thanks so much for your insight. I always appreciate it.
Thanks, Ryan. I appreciate you having me on today.
So I know when people ask me about the housing bubble, they always, and understandably so, go back to 2007, 2008. Give us your first reason as to why we're not in a housing bubble. Why is 2021 different?
Sure. Well, since the early 2000s, we've seen a dramatic change in mortgage lending guidelines. First of all, borrowers need to have skin in the game. These days, there isn't really much of existence of a 0% down payment loan unless you're part of a VA program. Also, borrowers are required to have mortgage insurance unless they have 20% equity in the property day one, again, with the exception of VA loans. The other thing too is adjustable rate mortgages are not as common as they used to be. And those that still exist, there's quite a few regulations imposed on them today that weren't existent in the late 2000s. And finally, borrowers need to prove that they can afford the home. There are strict credit score requirements and requirements on proof of steady and reliable income.
Americans and banks themselves, Kyle, really learned a lot of lessons, unfortunately, but fortunately so moving forward, especially when it comes to cash out refinances. That was so common in the early 2000s. What did we learn and how has it changed the mortgage process moving forward?
You're very right, Ryan. Cash out refinances are not nearly as prevalent today as they were in the early 2000s. Did you know that between 2005 through 2007, Americans pulled out $824 billion in equity from their homes, leaving them almost no equity to remain? Americans were essentially using their homes as their personal ATM machines. Cash out refinances today are a lot less prevalent, even though we've seen historically low interest rates over the last 3 years. The last 3 years of volume was actually 1/3 of the cash out refinance volume that we saw leading up to the last housing bubble collapse.
And at this point, Kyle, there's more equity in homes than I believe we've ever seen before, right?
That's right. People are very cush with equity in their homes. According to the Census Bureau data, over 38% of owner-occupied housing units are free and clear, no mortgage at all on them. And when you combine that with the 18.7% of all homes that have at least 50% equity in them, we're looking at 56.7% of all homes in this country with greater than 50% equity in them today. This is a significantly better equity situation than what we saw in 2008.
We also can't have this conversation without talking about inventory, which we know is extremely low right now, which brings us to your second point about why we're not in a bubble, and that's basic economics. Explain what you mean by that.
Sure. Simple supply and demand. These days, there's an absolute increase in demand and not enough supply to meet that demand on the market. 15 years ago, on average, there was a 20-month supply of homes on the market. Today, in most markets, that's averaging 2 months of supply. In fact, actually, between April of 2020 and April of 2021, we saw a 28% reduction in supply of homes for sale on the market.
And on the flip side of that is demand, which has changed so much during COVID, and it seems to be sticking moving forward, at least for 2021.
Absolutely. The pandemic really opened up a lot of people's eyes to their housing situation. They've had to work from home, they've had to school from home, and it's made them evaluate what are these living conditions that we're in and how can we improve upon those. For example, the millennial generation has made a strong push into the home ownership. First-time home buyers make up 33% of home volume sales these days. And your average first-time home buyer is about 33 years old. If we look back at the birth rates in the late 80s and early 90s, we see that we've just begun an exponential increase in the population. So As this generation gets older and starts to establish stronger incomes and reevaluates their living situation, we see them pushing the increase in demand over the next several years.
And your third point here, your third point about why we're not in a housing bubble has to do with the cost of building new homes, which are desperately needed. How does that all play in to us not being in a housing bubble in 2021?
Sure, Ryan. So, the flip side of the demand coin is supply. And a big reason for that lack of supply is we can't just go out and build new homes. Building new homes costs a lot of extra money than it used to. It's difficult to source materials. The pandemic has really shaken up the supply chain. So sourcing materials such as lumber and kitchen appliances have become much more difficult. For example, the cost of lumber alone has increased almost 3 times in the last year. Wages have increased, and there's a real shortage of skilled labor required to build homes.
Give us your kind of final thoughts here, Kyle, because I know that you get this question a lot. I get this question frequently about the housing bubble. And of course, we want our clients and anybody we work with to feel comfortable and knowledgeable about a big financial decision. So give us the kind of your final thoughts on why 2021 is not 2008.
It's not even close. Rarely do we see average home prices in the United States decline. In fact, it's only happened 7 of the past 80 years. And of those 7 years, 5 of them were after the last housing bubble collapse. Due to a variety of reasons, we're not concerned about the risk of a housing bubble. We feel that real estate is still a smart investment, and we have a variety of programs to help our clients build equity and purchase their dream homes.
Yeah, a lot of options out there. All right, Kyle Wesselink with American Dream Mortgage. Kyle, thank you as always for your insight. I really appreciate it.
Thanks, Ryan. Pleasure to be here.
Big thanks to Kyle, who is always so quick to answer all of my mortgage-related questions. It is such a crucial point to understand and get right in the home buying process, so feel free to reach out to him directly. I've linked his contact information below. Please like and subscribe to my channel for more housing market insights in Colorado, and as always, please let me know what questions you have about real estate. I'd be happy to help you navigate it. We'll see you next week.